Welcome back to Module 3, the process of private equity. In this module, we'll delve deeper into the intricate steps involved in the private equity process. From sourcing potential deals to executing successful exit strategies, we will explore each stage in detail. Get ready for an in-depth understanding of the private equity investment process. Private equity investments are carefully executed through a well-defined process, guaranteeing meticulous analysis, rigorous due diligence, and strategic value creation. Join us as we uncover the stages involved in the private equity investment process. The first stage of the private equity investment process is deal sourcing. Private equity firms actively seek out potential investment opportunities using a variety of methods. These include leveraging personal and professional networks, partnering with investment banks, attending industry conferences, and conducting extensive market research. Deal sourcing is a crucial step in the process as it allows private equity firms to identify attractive investment targets and gain a competitive advantage in the market. Once potential investment opportunities are sourced, the screening and evaluation stage begins. Private equity professionals conduct a comprehensive analysis of target company, which includes an in-depth scrutiny of its financials, market positioning, competitive landscape, and growth potential. During this stage, due diligence is conducted to assess the investment viability, risk, and potential returns. Advanced financial models and valuation techniques are employed to determine the fair value of the target company. After the target company successfully passes the screening and evaluation stage, the deal structuring process begins. Private equity firms collaborate closely with the target company's shareholders, management team, and legal advisors to negotiate the terms of the investment. This stage involves finalizing the valuation, determining the ownership structure, and drafting the necessary legal documents such as purchase agreements and shareholder agreements. Once the deal is structured, private equity firms secure the necessary funding for the investment. This typically involves a combination of equity contributions from the private equity firm and its investors, as well as debt financing from banks or other financial institutions. Funding the investment requires careful consideration of the capital structure to strike the right balance between debt and equity, optimizing returns while managing risk. With the completion of the funding stage, private equity firms move into the post-investment management phase. They actively engage with the target company's management team, providing strategic guidance, operational support, and access to their extensive networks. Through their expertise and resources, private equity firms work closely with the management team to drive operational improvements, optimize cost structures, enhance revenue growth, and ultimately create value for their target company and its shareholders. The final stage of the private equity investment process is the development and execution of an exit strategy. Private equity firms aim to exit their investments and realize their returns within a specified time frame. This can be achieved through various exit mechanisms such as initial public offerings, secondary sales, or strategic sales to other companies. The choice of exit strategy is strategically planned, taking into consideration market conditions, the target company's performance, and the private equity firm's investment thesis. The goal is to maximize returns and generate liquidity for the investors. Congratulations on completing Module 3, the process of private equity. We have explored the intricacies of the private equity investment process, from deal sourcing and evaluation to deal structuring, funding, post-investment management, and exit strategies. This comprehensive understanding will equip you with the knowledge needed to navigate the world of private equity successfully. In the next module, we will shift our focus to the exciting concept of value creation in private equity. Join us as we explore the strategies deployed by private equity firms to generate superior returns for their investors. Thank you for joining us on this educational journey.